Good morning.
Good morning.
Morning.
Hey Trevor, before the call starts, can you tell me the November was it 7th, 8th, and 9th?
Oh,
Is that
I don't
gonna
know.
be
I don't know anything about it. They don't let me know anything anymore.
my goodness, really? The thing in Austin is what I was gonna ask about.
I don't know. You have to ask Brenda
Okay. Ask Brenda, got it.
or
See, there
Mike.
you go. Now I'm pointed to the right direction. Thank you.
Good morning. Good morning, everybody.
Morning.
Happy Monday.
Good morning.
Morning.
Hey,
Morning, good morning.
big shout out to John. I think he's getting his first investors in the portal today. We had a call with one of his investors yesterday. It was awesome.
Thank you
Nice.
for joining. And I believe another friend of mine been trying to put the information. His name is also last name John Rajan. I don't know if from the back end anyone can see what he is doing. He was asking me questions through last week, and I met another three friends. They are investing one share under an LLC. Then Dr. Shitish should come. So there should be four of them. I'll follow up today. Maybe the help what I might need is, what's the exact link? Because I know I am behind because, a lot of things I was not able to.
We'll get Maria and I'm drawing a blank on her name to help you either today or first thing tomorrow.
Okay, yeah, if they could, take me to the, little bit fast forward to help me out, that'll be
Thank you.
good. Thank you so much once again.
Sounds good. We'll get started. I think mostly everybody's here. Okay, let me share my screen. Okay. Follow this, our agenda here. Okay, so we like to have no bots, and it's only for our insider circle and massive masters. And I don't see any bots, anything, so we're good. New members, anybody who's new, who has not introduced themselves yet? I think everybody has. All right. We'll have, should have a few new people in a couple weeks, right? So, okay, market update. So interest rate, not a big change on our probability chart. It's very similar to where we were last week. The meeting coming up is it like in a week? Yeah, next week, Thursday. And currently market is projecting a 0.5% cut, almost like 100% here. So interesting. I think there is some new data coming out next week. So, and of course the big,
They can't hear you right.
can you guys hear me okay?
Yes, we can.
Oh, okay, okay. So, some new data comes out next week, as well as, of course, the big day next week. So, we'll see where all that lands and what happens to this. So it's a big, next week is a big week. But, if not a 0.5%, 0.25% cut is a certainty in my mind here. So, and then in December, market is projecting another at least 0.25 point, right? So 0.25%. So I think we can rest everything, it's a downward interest for sure. So surprisingly, the interest rates for the 30-year actually went up a little bit. So our federal fund rate on average is at 4.83. As you know, federal funds rate on a daily basis, it fluctuates and varies a little bit, but that's where this has been. 5-year is still lower, 30-year, 10-year is higher. So actually we saw some of the interest rates go up on our Fannie Freddie interest rates, right? So we were seeing interest rates in like a low 5 or under 5 even. And then they have ticked up a little bit based on those treasuries. Again, the buy downs are available and agencies are willing to do the loans. There is capital available. Towards the end of the year, a lot of the times on those agency loans, the capital runs out by areas, right? So as we do the deals, beginning of the years is a little easier. You come towards the end. They have their allocated books of capital that they're due by markets and by type of products, right? So this year it seems like there is still plenty there. Hasn't run out mainly because the volume was lower. So oh yeah, so that was our kind of the interest rates. From a major news perspective, I wanted to share this. The Credit IQ puts together some of the distress. So last year and this year, we've been talking about the commercial distress, and even though the interest rates have lowered, the distress has hit the new highs, right? So these are the CLO, which are the commercial loan obligations. So those have kind of the blue line here is the delinquent. Once they're delinquent, they go into the specialty, and then there's a specialty serviced. And then the ones that are delinquent, they are in between these two, right? So that has hit the new highs, or continues to hit high. But this chart is the most interesting chart. Again, a little bit month or so behind there, but you look at the multifamily, there was a lot of distress, a lot of bloodbath that was expected earlier this year, but a lot of the lenders extended their loans. They worked with the borrowers. This particular time, the interest rates were higher and the owners were struggling. This wasn't really a lack of liquidity, which is what had happened in 2007, 2008. And a little bit in 2011, where the liquidity died, meaning the capital wasn't available in the market to lend. Right now, capital is available, but it's just at a higher interest to lend, right? The expectation for returns is higher. So that's where earlier in the year, you see multifamily with agencies behind it. Even agencies were working with the owners and operators to extend the terms, give extra time, put some interest on the back end, all kinds of arrangement that happened that led to not as high. But as it continues to evolve, it has gone up quite a bit, right? It hit the peak in August, and now it's on a downward trend a little bit as the interest rate dropped. So multifamily is, a little bit different cycle. Office hit the distress early in the year, and it's, even though it shows green and then a little bit red here, I think office will continue because there are no agency loans there. Retail, surprisingly, you see the volatility, really high and then low, and it goes up and down. Industrial, you see the percentages are so low compared to any of these others, right? So one deal going south kind of increases that bigger, the percentage-wise, but then it's really low there. Hotel continue to, survive through it, especially coming out of COVID. There was an increase in the travel and everything else. And then there is your self-storage. Look at this, green. And as we talk about the diversification across different asset types within real estate, you can see in this chart, how different asset classes have different cycles. So if you are, diversified within real estate, you have a way to survive. And self-storage, tends to be it tends to be in a lower leverage. Self-storage, 50-60% type of leverage. So lower distressed from that perspective. But one of my favorite charts that they have put together, and this is good. So the cycle continues to evolve, and we will see where it goes from there. Okay, and then this one I like to share. So Deloitte puts out, again, it's a typical your management consulting companies reports, lot of data, a lot of survey data, right? This is surveyed data where you go and ask questions to the business owners, multifamily owners, and various different classes, and then you come back and organize the data, right? So sometimes a little bit of a different spin to it. It's not an actual what happened similar to this, but it has some interesting insights. So one of the important chart, again, from a diversification perspective on our real estate side, multifamily kind of, dips as the interest rates were high and we were going into that. Multifamily dipped a little bit, and as interest rates are dropping, it's expected to jump right back up above a lot of the others. Industrial manufacturing, the flex, the storage, industrial type of thing is at the top. Climbing to the top as it has been climbing up with more and more activity in that stage. So self-storage for some reason is going down there. It's there, so that's there. Somebody asked, do we have access to this agenda on Monday.com? I'm not sure. We will make sure you get the access. Maybe we can link it on our portal there. So. But anyway, so from this, the capital raising will continue to be one of the most important part of any of us looking to be active in those deals, as much as understanding the deal itself, right? Understanding the deal, understanding the business is the most important thing always before you do anything, your own investment or taking anybody else's. But raising capital, having that money is as important, and lower the leverage, the lower your risk you have on those sites. So I'm going to skip through these two, but talk about Shariar was at the Calvillium Development Summit last week. So this was a group of about 80 selected commercial agents from the global Calvillium commercial agents who were invited to a development summit. And Shariar spent a day Wednesday next week, spoke as a speaker on new development. As you know, we have a project that we are trying to work through with the owners of Calvillium, Joe and Richard. So, but that was a very interesting visit. Sharar is not available today. He's at his kid's school for an event. So we always support and like those things. So, but maybe next week Sharar can give some live firsthand inputs from there. But it's an interesting summit. A lot of interest in new development, and Keller Williams, because of the size, because of their scale, the way they are, they get a lot of deals, right? Like anybody, a lot of the owners, a lot of the sellers, when they say, oh, I want to sell, who do they know? Keller Williams has that brand, right? It's everywhere. Everybody knows, everybody heard of it. So they do get the volume of traffic through their brand, just because of brand. So equity raising activities from our side. Candela launching today is it's launched. It is a 506B right now until October 28th, a couple days until October 30th. So a couple more days, and then Candela turns into a 506C. And 506C is when we can go wide and work openly on this. So I see Trevor is here, Mike is here. You guys have any updates or anything you want to talk on this or any of the previous topics, guys?
Yeah, so we've got several good investments already into Candela. We're super excited. I'm super excited to switch it over. It's very exciting to see some of the folks from our master's program getting some investors. It's for me, that's probably the most personally rewarding, seeing them go from, just wanting to learn to actually being able to become a GP on a deal. It's a great thing to see.
And that goes to your point earlier. John just joined us 2 weeks ago, and he can be GP on this deal, right? So
Thank you, guys. Question on when you switch to 506 B to C, how complex is the accredited investor documentation? How complex it becomes?
Yeah, so while we are on 506B, all we need to make sure is that we know them, we have a substantial relationship. We do document some of their sophistication, experience and stuff, but not a whole lot. But 506C is 506. Sorry, Mike, you want to add? Go ahead, Mike.
Just a little bit on the 506B still, Sanjay.
Go ahead.
Because people do get the opportunity if they can invest as accredited on 506B as well. And during the 506B period, they get to just basically they self credit themselves, and so they don't have to, during 506B they can claim accredited investor status. And the good point of that, the reason of that is two things. One is it limits the number of sophisticated investors you have against the deal. So if you were knocking up against your 35, you want as many people to self-accredit as possible. So they can go through that during the 506B. And then during the 506C, and I'll let Sanjay share some more, and Trevor can share some more as well. The process is, it's fairly simple. There's a couple ways that it can be done. There's actually tools within the portal. It's called Parallel. The tool that we currently use within the portal is called Parallel Markets, and what happens is an investor submits documents to them. Let me mute.
Somebody has
the investor submits certain documents to them, which is basically their tax returns for the last 2 years, and that can be the primary. And the other is a little more involved, as if you're going to do so accreditation against your income is the easiest. The second one is then if you're doing accreditation against your assets and holdings, then you have to go through a little bit more work there. But it's very easy on the first side. And most people do it straight through the process. But if they also have a CPA, attorney that wants to look at their documents for them and say, hey, they're accredited, all they have to do is create a single page document that says John is accredited based on this, and then it's good for a 5-year term.
Okay.
So those are the things that can happen. Trevor, Sanjay, anything else I missed?
Yeah, and just so everyone knows, 506B is limited to 35 sophisticated investors. And again, for those who are accredited, I love investing on a 506B because I really dislike doing the paperwork. And as Mike mentioned, it can be by your income or by your net worth. So income 200 as an individual, 3 as a family, 300, or $1 million excluding your house. And it can be done by a third party, which is normally what's done. And that's all covered under the portal. Massive Capital takes care of all of that. You just upload your documents. And if it is just by wages, it's quite simple for our in-house legal counsel to verify you with a tax return or W-2.
Okay, thank you.
And this follows the SEC guidelines. And I always refer to this protect grandma's money. It means you have to have the existing relationship. You have to understand. They have to understand the financial risks. And if you're accredited, the government assumes you're smart enough to make your own decisions. But it also means starting November 1st, we can market the daylights out of this on all forms of social media. Just wait for the official word. Because sometimes we're waiting for one signature and we delay just a little bit.
Thank you, guys. Awesome. Okay, addition to Candela, Fund of Fund for Horizon Apartments, that's in San Antonio. That's already a 506C. That is, we're launching a Fund of Fund. Mike is leading this week. That's going up. There is a capital raise community call Wednesdays 12 to 1. That's open to everyone. So, of course, anybody on this call is also welcome to join those. And then we do have the debt and equity fund in progress that are going forward. LOIs and under contract deals. So on multifamily side, we had Schreier from the team, this team submit an LOI. Broker ask was around, I think it was just under 13 million. We went in at, made sense at 9.7 million. They countered at 12 million. So a whole $1 million that they slashed on the price. And in conversation with the broker, they did not really have a lot of interest at those price range. So interesting conversation there. That was here in DFW. So the updated LOI still in high 9 million range went out. So that's going on. I think Alok and team were working on an LOI again, a little far from the brokers, sellers ask, but they didn't have a lot of interest there either. So that's going on, and I think their team is working on a couple more LOIs there. That's progressing. That's going. On new construction / land, John's contact, that one is slowly progressing. There is agreement on the price with the seller, but the legal structure and the details still being worked out, and that's going on. I know in the other asset classes, industrial flex, Jessica has a purchase and a sale going on. So that's progressing. That's there. I'm keeping it high level just in the interest of time and kind of more from an educational perspective than the actual deal details. Any other LOIs or contracts that anybody on the team here have worked or that's going through last week or so? Leo, I
Sanjay.
know. Hey,
Oh,
Alok,
good
go
morning.
ahead.
Yeah,
Hey.
actually, I discussed with Janice McQueen, and I don't know he's on the call or no right now. So we discussed for one of the asset here in close to Pasadena and Houston, like the zip code, Houston zip code, but close to Pasadena. It's a like
Yeah.
2023 complex, and I visited there on this Saturday or Sunday, Saturday, I believe, yeah. So it's very good, very good. I mean, the only thing in my concern, which I want to talk to very, very high level, not, I know this is not the call for discussion for the underwriting, but like the right now, any idea like pricing for the newly construction, how much we should underwrite? That's it. I want to know, like, 250 units should be like 120 units, $1,000 per unit or something like that, or 130,000.
Yeah, so I wouldn't really go like say, oh, new construction is in this range. It's a big
Okay,
dependence on the rents in the area, right? So
right.
so that one, I think what they're asking, the 130 a door was definitely too high.
They're asking
Especially
150. They're asking 150.
150. Okay, yeah.
Yeah,
So for
yeah,
Pasadena, that's definitely too high. You know, the rents tend to be on the lower side and there. So
yeah,
yeah, let's plug in the numbers and we'll let
yeah. We'll talk
our
later. That's fine.
underwriting
Yeah,
kind of do that.
sure,
So
sure.
tomorrow morning we'll
Yeah,
discuss. But good
we'll
point.
do.
Yeah, thanks for bringing that up. That's I think we are going to submit an LOI. It's a 2022-23 build,
Yeah,
brand new
23
apartment
rupees.
complex. So
Yes.
you know,
Mm-hmm.
it's a great property from that perspective, and
Yeah.
so
Okay.
that's going on.
Sure.
Leo, I know you were working on a deal in Odessa. I'm not sure you heard back from the brokers on those.
Uh, hey, yeah, sorry. I head back. I talked with them on Friday, so they said they have a portfolio buyer. I think it's 12,000 unit. So we're trying to get like just 230 out of the 12,000. So they have a portfolio buyer that is very close to the price, and the seller is interested with the portfolio rather than selling individually. So I think they say they are gonna go with the portfolio buyer.
Okay.
Yeah.
Okay. Yeah, so it was a portfolio of like 5, 6 assets, combined 1,200 doors. We
Right.
weren't interested in 4 or 5 of them, only one. So Leo had submitted an LOI, and of course, from a seller perspective, it's easier if there's one buyer takes it all instead of splitting into pieces and going there. So yeah, hey, let them try. It may fall out, and come back,
Yeah.
right? So
Right.
the money in the is in the follow-ups.
True.
It truly is. And a lot of the times, even though a deal falls out, we go back and follow up to see where they landed, what happened. Even though the buyer who went in, they may make it work, but the feedback you get is very crucial. Similar to that, there was a Class A multifamily here in Dallas downtown. The broker was guiding around 98, 99 million. Our underwriting was around 90 million. We could push it to 92. Maria is here, and Maria has been following up with the broker, and they finally got multiple offers and went under contract with some group, and they are above 100 million on that. So in this market, it actually went above their guidance that they were guiding. So I'd like to see what they did, how they underwrote. We did request the broker to share that, and they said, hey, still under contract, still under the, due diligence period. I'd rather not share anything. Once it's gone through, they will share. So, we'll stay in touch and kind of always learning towards the type of deals you will be doing or like to be doing, right? And that's where it's a mid-rise Class A building in Dallas downtown, right? So that's a good deal to strive for and to be doing. So and nothing new from broker Maria, right? From other than what I said there. I don't know if you can talk or unmute or not, but
Yeah, nothing new from the broker. And yeah, the another thing is that the portfolio, while we're looking at the portfolio, they have some section A there, A property, A tenants on one of the properties, which was not really attractive. And then there was another one which they have the low income as well. So this sunrise, that was the best one among all of them.
Yeah, yeah.
Yeah.
It is a high risk market. Odessa, Midland Odessa is a high risk, high dependency on oil and gas sector. So it's less of a real estate and more of an oil and gas investment to me. So, as long as cash flow is there, I can get behind it. But
Right.
that's where we were going with it. So
Yeah, the cash flow is very attractive. They have like day one, they have year one, they have like, in fact, day one, they have like 8% cash on cash, and like the next like 5, 6 years, if things go the same way, they're gonna have like 13% cash on cash.
yeah, that one was cash flow was really good. So,
Yeah.
but that's okay. That's good. Okay, if no other, I know somebody from the group was working on a portfolio of 4 or 5 gas stations spread across the United States, so Illinois, East Coast, and Texas. So of course that's outside of Massive's buy box. So that's something we will not do it. Just the gas station is a type of investment from Massive side. We are not very first of all, we don't know a whole lot about that, so that's a big deal. And the second, again, some dependency on different factors than the true real estate, right? So we kind of shy away from gas stations, but that was submitted. We're looking at it. If somebody has a deal that doesn't fit our buy box, but they need help, of course, we would facilitate and help you put together. But you're taking the risk of that asset, whatever the risk that may be. So, but from buy box perspective, we are kind of doing our buy box 100+ units, 80s or newer, or even 90s or newer is focused, but we do look at 80s. No coastal flat roof we shy away from, but not a complete wipeout. We look for median income 45+, primarily Texas, Arizona, Colorado. But again, if there is a major cash flow deal, then we would consider the markets. But this really primary buy box for Massive is there. We do the KP support on as a loan guarantor on non-recourse loans, 8 to 15 million deal size, and with that, the consulting on the deal that goes. So deal-wise, all of you guys are there. You have access, you have teams, you're working in your deals within your teams, and we discuss on our 9 o'clock calls. Of course, we have that mailbox open. If you submit to that, submit a little more details of underwriting, why it's good, why do you like it, why is the seller selling, right? That is always a big story of why the seller is selling and what's going on there. Typically 2 to 3 days, we turn that around. So, okay, so that's it for this. I think from the event perspective, I don't know if we have any events for this week. Yeah, so no events from this week, and 9:35, and I'll stop here and we can open up for questions. And I see some questions sorry, go ahead.
Yeah, hey Sanjay. I'm as I mentioned, like week back, this is Gary, and mentioned before, a week back, we are doing some underwriting for an assisted living. I know it's not the one of the asset class that you support, but the underwriting is more like multifamily or anything, like, we have the income, we have the expenses, and everything is similar. I was just wondering if I can able to review, like, if I can able to block sometime on Friday or like, when some time to review my underwriting. There's something that possible.
Yes, so Gary, from asset class perspective, you're right? Like underwriting is very similar from a logistics perspective. It's all about the income, expense, capex, financing, capital, right? It's similar pieces, but the assumptions are different, right? So if you want to review underwriting, 9 o'clock, right? Tuesday, 9 o'clock, that is the primary focus. Bring it there, let's talk there.
Okay.
And we can even the other days, Wednesday, Thursday, Friday, the primary focus of the call starts with capital raising on Wednesdays, contract to close Thursdays, and Fridays to finding deal, broker conversation. But as we have time left, we do go into the deal underwriting or any other questions. So first, I would say, hey, 9 o'clock is available, open, come there. We can look at the underwriting there. And also, are you working in a team you have a sponsored consultant assigned to you, right?
Yeah. I'm working with assisted living team, actively working with the team. Olivia, Jose is running his assisted living. He's a
Okay.
sponsor. Olivia, Sarita, and Tina. Yeah, we're all part of assisted living as part of the CRE group. And
Okay.
I'm helping underwriting one of the property in Austin.
Yes.
We are close to making the deal working. So that's why I want to double down on the underwriting, and then some of
Yeah. I am curious personally about that one, so I wouldn't mind seeing that on 9 o'clock calls and reviewing the underwriting and give my feedback. But to finalize the underwriting, Jose is this sponsor consultant, the expert on this, and you should really, if you haven't already, schedule time with him. He's awesome. He's available. He's very responsive. And review the underwriting with him, and he will give his feedback. And whenever you schedule a time with him, I'd love to join just to kind of see the assisted living side too.
He's pretty much involved in this deal. He's been in the calls, and I'm updating him all the time. He's more like an operational guy. He's new to this syndication and putting the deal structuring and all that stuff. He's pretty much more operational, and his son is an accountant. He actually sent me an email that he saw some underwriting, he has some questions, but I'm going to review with him as well. I'm pretty involved with Jose. In fact, I went to his facility, and then he's the one who gave all his accounting for this underwriting.
Awesome. So you have good feedback from him. Yeah. Let's review tomorrow 9 o'clock, and then finalize eventually. Jose finalize with him. And from a loan perspective, you're going to need an experienced person on the team on the loan side. So that would be Jose, because
definitely.
I don't have any experience with assisted living quite yet, but I'm very interested and fully love to support assisted living. Yes, that is
perfect.
That is a good aspect.
And one more thing, if you don't mind, so the tool that I'm using is Mike. I'm sure you know the Michael Blank template. So I've done the underwriting for multifamily before, so I don't have any other tools. So that's why I've been using Michael Blank template. The way we're structuring this deal is infinite returns, right? We have a year 1 to year 5, and then year 6 to maybe where. Even though if it is infinite, we are finiting it 15 years to show the numbers to the investors. And the way I'm doing this underwriting is I'm splitting into 2. So I have a file for year 1 to year 5, and then I have another file for year 6 to year 15. So do you have any other better tools for infinite return model, or what I'm doing is okay? Of course, we can review that tomorrow, but any other better tools than what I'm doing now?
Yeah, interesting. So we have not run into this. Even the other tool for underwriting we have, that one is a 10-year.
Okay.
So we don't have anything that goes beyond 10-year. From a IRR perspective,
Huh?
I don't think IRR changes a whole lot beyond 10 years. Like you can keep extending it. It's almost becomes a certain return. But let's look at tomorrow's
Okay.
call, 9
Okay.
o'clock. Yeah,
Okay.
we'll
Sounds
look at
good.
it. So
Sounds good.
good.
Thank you.
Good questions. Melinda, on the Georgetown land, I have not heard anything back. I think the last I heard was there's $8.5 million was the guidance from Schreier that was given. I'm not sure you have gotten any feedback back from the owners currently, and I'm assuming that's quite a low price wise, but we have a land in Georgetown that we're going through, and we have ran into the issues with the Georgetown that we're going through. So last update I had was going back at around 8.5 guidance. And I'm not sure if there's further feedback from your side on the owners and sellers.
There is, so the seller he's all in. He's willing to allow us to take over the current loan that's in place at 5.6, and for him to walk away with 3 mil. So
Okay.
we're at the 8.6, and he's ready to deed it over, do whatever. He just need to get it out of his name and walk away.
Wow. Okay. In that case, I think that's we need to move. That would be I think that sounds like a really good deal. So I know Schreier is a little busy this morning with his kid's school, but this afternoon let's touch base, and I'll message him too.
Perfect.
And for deal submission, no, there is no .com.
That's
It
what
is
my problem's been. I've been sending y'all stuff and it's been bouncing back because I assumed it's supposed to have a .com. So I've been sending y'all a whole lot of stuff and it's been coming back. Thank you so much for that clarity.
Yes, perfect. Yeah, thank you. I know, believe it or not, when we started originally, massivecapital.com was taken. So we started with massive.capital, and then the person who had massivecapital.com let it expire, and we just happened to check. So we do have massivecapital.com domain, but we just haven't switched or changed anything. But emails are all on setup on this. So
Perfect. Thank you.
good. Gisela, there's a question for the access to the Google Drive. Yes, so we talked this morning. I think we're gonna make that. Is Mike here? Mike is not here.
Yeah, I'm here, Sanjay.
Oh, you are. Okay. Mike, you want to update on this question? Let me stop sharing so we can see each other.
Yeah. So yeah, so we'll we're got to go another level of access into the folder, but we're also going to make the process integral with the process of signing up with Monday.com when people get all the signups. So we'll work through it today to get the process set up and get people's accesses situated as much as we can today through that 2 steps.
Yeah.
And in the future, it should be more automatic as well.
Yeah. So we are giving that access at a 1 level up folder. Yes, thank you, Gisela. Okay. What are the questions or anything else?
I know Kishore has his hand up, and then I saw. So did you already address Martin's Gianna's question? That was not a training. I think the one you were talking about was Keller Williams event that happened in Austin last week. So Keller Williams commercial side had an event there and invited Schreier and some of our other partners to come and present and be part of that with them. So we're in the middle of doing some partnerships with Joe Williams, the founder and owner of Keller Williams. So that's just part of an information of things, and kind of more it relates to a market update of the feedback that we're getting and what we're seeing, it's happening. There was a lot of discussion in there, I know, about land development. In that process, Joe is doing a land fund as well, so that's all tying things together.
Yeah, okay, that's good. Kishore, question?
So we're working as a team on 3 leads, and we have done the napkin underwriting. Do we bring all the 3 to the 9 a.m. call, or do we work with our mentor to downside to one deal? What's the process?
Yeah, so process is work in the team with the sponsor consultant, as you have lead and the sponsor consultant. As you have questions, or if you say, hey, we are wiping this out, I want to get a second feedback, feel free to bring it to 9 o'clock call, right? So 9 o'clock call is kind of a catch-all, bring it there, we'll discuss, time as needed, we'll spend and go through it. But if you decide and comfortable talking with on a deal that we're scraping it, it's way too far off, completely fine, don't have to bring it to the 9 o'clock call. So that's, yeah.
I believe Mike is our sponsor, or sure, we just need to confirm, because we're under a timeline with 1031 exchange, so we're wanting to move aggressively on our
Okay.
deal.
Which team is it?
Guys leading the team.
You have to see.
Mike, you're looking at which team?
Yeah, and
yeah.
yeah, no, I'll just double check here. I'm not sure. Just a second. I wanted to clarify what is your timeline or your deadline related to 1031 exchange? Just curious as it relates to the team and the deal.
Jessica is confirming, I believe she said we had 90 days left, so we're targeting something by the end of this year.
No, but you have the money then from somebody's 1031 for how much?
Jessica?
And is this a flex space or this is the multifamily?
This is the flex space.
Okay, that is definitely Shariah.
Okay.
And how much is the exchange? Do you guys know?
I believe she said 600.
And how much is the deal?
We're looking at $3 million deals with some financing.
Real quick clarity here, Eric jumping in for a quick second. We're targeting a property 3 million or less. When she liquidates, she'll have 800, but the transaction is somewhere around 1.3 million, maybe 1.6 million, somewhere in there. So we're getting clarity around that.
Okay. All right. So somebody on the team's property that wants to 1031 into a new deal, the team's working on finding the opportunities that would fit for that. Yeah, okay. And that's definitely Shariah on that. I'll follow up with him today. But and if you guys have like as well, like when you've gone through, you've got napkin underwriting and you're saying, do all of them look as good as the others, or they're all great deals? And you want to do all 3 and you're trying to decide which ones of those 3? They're all, hey, Jessica, go ahead.
Hi, sorry, I couldn't get my technology to work. So I am selling my building at 1.6 million, and out of those 1.6 million, I gotta pay back 800,000 for a loan. So I have about 800,000 to use on a 1031 exchange. So I need to buy a building that's more than 1.6 million,
Yes.
correct?
And you're under contract to sell already?
Yes,
Okay, good.
I just signed it last week.
Okay,
Mhm.
okay. Okay, perfect.
So that's the deal. I have another deal that I'm fixing to buy, but it's 1.4 million. So I can't use it for the 1031 exchange because it's less than what I'm buying mines. I mean, selling mines. So then we're looking at a third deal, which is the one we're working as a team. And that's why the parameters are So my broker had told me I can double the value, so I can go above the 1.6 million. Double of that value, so that's what we're looking for, 3 million or under, and yeah.
Okay. And you've already got your administrator lined up for your 1031 as well?
Right now, we were thinking of using our title company. That actually the big dogs use a lot here in Dallas. They told us that they could handle it, but I'm looking into that. If you recommend us to use somebody differently, we're open to that.
Okay, let's talk about, we'll talk through that then too, okay? I think that'll be a good follow-up. We won't have time today
Okay.
to talk through like what are the things that be sure you guys that you have everything lined up and that it aligns with the team. The timing aligns. I think the schedule, it's not as tight as it sounds, but the schedule is still, you want to work through it pretty efficiently, obviously, because you got the time between when you declare what you're going to invest into versus the time you actually have to make the closing of the next deal. They're two different things.
Oh, okay.
So I think we can work through some of that as a team, and that'd be maybe a good discussion, even if you're working on some of that tomorrow, Sanjay, or one of the other days. Okay.
Yeah.
All right, good.
Yeah.
This is good feedback. And then I saw Candace, did you have a question? Or you were just...
Yeah, I was just gonna get, Sanjay recommended a really good 1031 person to me a couple months ago, and she's worked out really great. But secondly, can
And
you give
share
me
that
some?
in the WhatsApp chat later, Candace, that'd be great.
Okay. I think it was Leanne or Luann or something. But she's been phenomenal. So, but the initial reason why I raised my hand, can you give me just a quick update on, I'm trying to get one more trip down to Texas before the end of the year. And I was looking at the 7th to 9th date. Can you tell me what that's going to be covering? Or if there's another better date that I should come down?
So the upcoming things that we have 7th, 8th, 9th in November and December 6th, 7th, or December, I think 6th, 7th, 8th, coming up, one in Austin, one in Dallas. It's really going to be the same things that you guys have already seen if you've been to one of our events, and it's really not there's not a large, those currently don't have a large value add at those. We're looking, so we're working on planning some stuff in January, February, March, somewhere in there, that will start to include the bringing the kind of mastermind together with an event. So I would say those two probably don't have a lot of value in December, November, December, don't have as much value as what we will be coming out with in Q1 of next year, that will be bringing the mastermind together as part of a fulfillment piece that we're working towards.
Okay,
Okay.
thanks.
Sanjay, any other thought on that? No?
No. So, but Candace, from a networking perspective, let us get back to you. What would be good for
Yeah.
Texas visit?
Yeah, that's
Mike,
fine.
So
Yeah, I
from
know.
an outside of that, we can look at some other events, and if you're, for people wanting to come to Texas and wanting to spend time in Houston or Dallas, of other upcoming events, that would be a good tie. We can as well tie to that. That's good. So you're sort of seeking two things, I think, there then. You want to come and see, like some people like Eric, you, others, and Maria want to come and network in Texas, go look at some deals in Texas and try to tie things together in one visit, probably. Is that right?
That's partially right. I know the only, like you guys started the 3-day mastermind after I had done the 1 day. So I wasn't sure if that's what that 3 days was, or what that 3 days was going to be accomplishing. I also wanted to try to tie in a time that I could go down and meet with I'm changing over tax accountants as well. And so I was just trying to tie in a few different things when I'm in Texas. So that's why I asked about the 7th through 9th, if that was the 3-a-day event again that you guys were having, or if that was something totally separate or what that was. So I couldn't quite figure out what those 3 days were for.
Okay. Okay, let it,
We'll talk later.
Okay, we'll come back to, yeah, thanks. And
Yeah, no,
we'll
that's fine.
come back to everybody with a little bit of feedback there. And, yeah, go ahead. Thank you.
Okay,
I saw
thank
somebody
you.
else.
That Gisela posted, we're waiting on CoStar reports for our properties. We can get some help on that.
What email did you send? Did you send it to deals@master.capital request for CoStar, or was that to education?
It was the education one. That's what I saw in the chat.
Education one. Okay.
I'm working on those.
What's that?
I'm working on those.
Okay, thank you. Any ETAs on when, like, well, today or tomorrow?
Today.
Today, okay. Thank you, Ellen.
Alan, you have access. Let's talk about that access also, because now it's getting two different, right? Mailboxes, so we need to. Okay, we'll talk through that.
I just want to give a quick shout out. I was at the Directed IRA event with Shanoa, Maria, and Cody was there, and Shanoa killed it. And you need to make that presentation to this group, because I had goosebumps. And it was so powerful. And I sat there and thought about my life and thought, there's so many things I'm not doing to get to do the big actions. So that was, without a doubt, it was super inspiring. And on a side note, super impressed with Direct IRA. Those guys are amazing. And they put on a really good, I learned a lot, and you know, I just feel really good that we're moving our investors to there, and I'm moving myself to there. So, but I wanted to give that shout out because it was awesome.
I appreciate that. Thank you, Trevor.
I don't get goosebumps often.
So normally you guys know me to speak about real estate investing, and when they asked me to speak, I looked at their schedule and I'm like, well, you don't have anything that's inspiring, anything that's motivating. I said, I have one thing in the back that I could share with you guys, and it's a presentation that I did at the Masters event in March of this year. And it was a motivational talk, and I thought it was pretty powerful. So I rejiggered it a little bit for the end of 2024. So when I gave it in March, it was called Blow the Doors Off of 2024. And when I gave it now in late October, it was Blow the Doors Off the rest of 2024. And basically that most people are phoning it in the last 2 months. They're taking a holla month, or, you know, a holla week. And this is our time to be able to separate ourselves from our competition. And this is our time to be able to separate ourselves from who we were the same time last year and serve our future self. So that was the context of the presentation. And yeah, it was a lot of fun, Trevor, and great seeing you and Maria, as always. So yeah, thank you for that.
And I did one of the coolest things I've done, a self-driving, like Uber type car. You basically ordered on your app, you push a button, the doors open, and there's nobody there. It blew my mind. I loved it.
Yeah, that's awesome. That's awesome. I'm jealous. I wanted to see that. I saw your post, Trevor, and portion of what Shanoa was speaking there. So yeah.
Yeah.
I am jealous.
Awesome.
Thanks, Trevor. Thanks, Shanoa. Mike, you're sharing screen.
Yeah, I thought I
Okay.
was on mute. Thanks, Shanoa. Thanks, Trevor, for the quick. I wanted to share with everyone quickly. You know, the portal, everyone should be getting emails and access to the portal. And as you go through, the key one here is the onboarding. If you've not got anything, but if you're needing help on certain things, you go to the onboarding, and it's got opportunities here for book a call, set up the WhatsApp groups, get into the WhatsApp groups. I mean, set up your Red IQ, set up Monday cash flow portal, your capital raising certification. So everything is coming out here in the process. You can also, look through what's also in here, resources and tools. So I wanted just everybody to, start being sure you get acclimated into what's available here as well. And there will be things adjusting, changing, cleaning up as we go, because we've merged two things together again, as I talked last week, and appreciate the assistance and patience of everyone as we work through that. But this is the where you will be able to find the majority of everything you're looking for as it goes forward. So thanks as well to Shanoa and her team, Wesley, who's not here, but for helping us get all this up and running effectively. So I will stop share there.
That's good. We're at 10
I think that's
o'clock.
it.
So yeah, we'll stop here. Happy Monday. Have a good week, and I'll see some or all of you on 9 a.m. tomorrow. Thank you, guys.
Thank you.
Yeah.
Have a good
Thank you.
day.
Have a good one.